Hi, it's Chris Titley here. As part of the Morgans Conversations, I'm joined by Dean Fergie from Cyan Investment Management. Dean, welcome to Brisbane.
Thanks very much, Chris. Good to be here.
Dean, tell us about Cyan Asset Management.
We've been around for 4 years. We are a wholesale fund. We really only have clients who are wholesale clients, minimum of 100 grand. We've been around for 4 years and look at the really small to micro cap stocks.
And tell us about the name. How did that come about?
Cyan, for those that are more technical, it's a subtractive colour. So you'll see it in the printer cartridges. You've got yellow, cyan, magenta and black. Cyan has no red in it. So right. The premise is we just didn't want any reds in our investment, which is the theory, not always in practice.
And how have you gone with that over the last 4 years?
I look generally pretty good. Look,
yeah.
I mean, when you're a long-only fund and you're looking at the smaller micro cap, it's pretty volatile. If you get the right stocks, you do really well. And so we've had some years we've been up sort of 20 or 40%. The last year hasn't been fantastic. We're up about 10%, which is obviously well in excess of inflation, but not as good as we'd like. And there's clearly, in a down market, we won't make money for our clients.
Yeah, and Dean, some sectors there, the technology sector you've looked at, and there's some stocks that I know that, Freelancer and Afterpay, etc. you've looked at. Can you talk about that sector in general here in Australia?
Yeah, look, I think the sector globally is fantastic because it's extremely scalable. You get into a good sort of IT product, you can build it out without having to get staff and real estate and those sort of things. But it's obviously difficult and very competitive. And the problem at the moment is all those stocks are just incredibly expensive. You look at the Afterpays, the Xeros, the WiseTechs. They're all trading on monster multiples, and it's hard to get in. I think Freelancer is a bit of an outlier that I think we've spoken about this before, that you've got comparable stocks in the market, recently listed upward, which is trading at 4 times the valuation of Freelancer. So we've been buying more Freelancer recently. It's pretty much cash flow break even, got a strong balance sheet, which we reckon it's a good one.
Excellent. And some other sectors or stocks that you're looking at?
Yeah, look, at the moment we think the sort of infrastructure spending is a really good one. So we've got a decent holding in Acrow, which is in formwork. We think that's going to be a really strong 5-year play in Australia as it really develops its infrastructure, roads, obviously the metro tunnel in Melbourne, all these upgrades, bridges. We think it's a really, really good long-term theme. And there's some other little tech ones there. We really like a small business called ReadCloud, which is digitising textbooks.
Yep.
Again, that's got a small amount of revenue. It's not profitable, but if they get that right, it's massively scalable, and anyone that's got kids is going to see them lugging books around.
And education is such a great sector to be in as well.
Yeah, and it's one of those sectors, it's pretty much government backed, but it's also quite slow moving. As I say, it really hasn't been fully digitised yet. So ReadCloud have got something like 80 schools on board, quite a lot of Queensland backed schools, about 50,000 students. So it's a formative one, but I think if they really start generating some traction in that space, it could be the next big thing.
And Dean, being a long-only fund, buying is relatively easy sometimes, but also selling. Tell us about your selling thesis and how you look at when to sell a stock.
Yeah, you've got to remember it's a two-way street, I reckon, Chris. Yeah, it's really easy to buy into things. It's hard emotionally to sell out of them. For us, there's a bit of valuation work that goes on. We're always trying to rebalance our portfolio, so we don't want to get on winners that become too much of the portfolio that then crash and have a big effect. But obviously when stocks don't perform to expectations, it's easy just to cut them. And we don't care if we've made money or lost money on them. In fact, sometimes it's better to take a capital loss and just move on. I think it's a really cathartic experience to just get rid of a stock and move on. And maybe that's what private clients don't do fantastically. They hang on to their losers, and it's not a good thing to do.
Dean, thanks so much for sharing your insights to Cyan, and congratulations on your returns thus far.
Awesome. Thanks, Chris.
Cheers.